And let's also pull up, from the day's highs, we have seen some selling on Ather Energy in this particular quarter. But let's also get in Tarun Mehta, who's the executive director at the company and co-founder, of course, of Ather Energy. Tarun, a very good afternoon to you. Thanks so much for joining in, and welcome to NDTV Profit. Largely, let me start off first with the key question. You have reduced costs in this particular quarter. EBITDA is also, the losses have reduced. Do you expect that by this time next year, Q1 FY27, you will be able to be at EBITDA break-even levels at Ather Energy?
Right. So last quarter was a great quarter for us. Our new product, Ather Rizta, family scooter. Sorry. Yeah, new product, the family scooter, landed really well. And I think that's the primary reason why revenue was up almost 80-90% over last year. And sales was up almost 100% over same time last year. So this product is really allowing us to expand into the entire length and breadth of the country. We've expanded our distribution almost 30-35% just in one quarter, just in Q1. And this trend we expect will continue for a few more quarters. Ather's had one of the smaller distributions. And with that alone, we were doing 14-15% market share. We can catch up a lot on distribution over the next few quarters. So we are forecasting a fair bit of growth potential on our distribution footprint, powered by this new scooter. So our unit economics is already at a good place, and expanding distribution should give us a fair bit of operating leverage. And that's what we expect will drive reducing losses over the coming quarters.
So Soumit Sarkar also joining into the conversation. So on a sequential basis, if you look at your gross margins, they have expanded by nearly 300 basis points. Is there more room for expansion going forward, or gross margins will stabilize around the current levels?
I think the entire industry is at a fairly early stage, and there's a lot of cost reduction that continues to happen every quarter as we speak. For us, three strong factors in the recent quarters have been first, favorable commodities, particularly with lithium-ion cells. Second, strong results from value engineering. Our engineering teams have had a stellar record over the last few years in cost reduction, and that's continued in recent months also. And third is very strong sales of our software accessories. So that continues to trend really favorably. We're very close to the vast majority of our customers, almost 80-90% of our customers continue to buy software, which is a very high gross margin product for us. And despite the launch of a more mass market product, that trend hasn't really flagged off at all. So these three factors have contributed to strong trends. In the coming quarters for us, we expect material margins could get better because we are moving to cheaper chemistry cells, LFP versus NMC in lithium ion. So those we expect will help with margins. Value engineering will continue, and by next year we'll have a new platform, the EL scooter platform, which is a which is lower cost platform. So we expect that will also help with margins.
Joining in as well, you just spoke about the EL platform that is coming. In fact, August is the date that we should be watching out for. Just want to get your sense in terms of further market share gains, particularly to the new launches also, which are anticipated, if you can talk about that.
So if you see our market share performance, in markets where we have had strong distribution and strong product fit, for example, in South India, it has been around the 20-22% market share mark for a while now. In places like Gujarat, in recent quarters, we have seen a phenomenal result. In fact, last month, if I'm not wrong, I think we were #1 in the state of Gujarat. We believe there is an opportunity for us to recreate a performance very similar to what we have achieved in South India and Gujarat in many other parts of the country. And distribution would be the key enabling factor to do that this year. And the lower cost platform would be the big factor next year. I think we closed July with just under 16% market share, which seems to be a defensible position. And given the expanding distribution, we believe there is a few more points of gain that could be within sight in the coming quarters.
Tarun, just one question in terms of South India, because you have been #1 in that market for a very long time, and you mentioned about store expansions in Middle India, as you call it. Specifically, those stores in South India, is it that the sales coming from there will be, give you higher gross margins because of lower discounts in those areas, or is it that the actual sale number is something that we should watch out for going forward for you?
Ather has never been, we've been never big fans of discounts right from day one. Even in the peak of discounting in our industry about 4 or 5 quarters ago, Ather stayed away from any real discount outside of 1-2% discount typically during festive, and that's going to be the strategy going ahead also. Obviously, newer markets will buy more lower end variants in the early years, but we have seen a very healthy. I think the number one direction for me here, from which I'm taking direction, is the sale of software. Our software sales across all geographies, across states, have been very, very strong, which I think is symbolic of the fact that Ather can sustain strong ASPs irrespective of the market. South, given that it's a large market, so old market is obviously one of the more profitable markets for us. But I think I think every market for us is quite lucrative and is becoming quite lucrative with every passing quarter.
Well, Tarun, just one final question from my side. You have raised money in this IPO for some capex on R&D, but also putting up a new factory, which will likely come in Maharashtra. So your capacity utilization has been hovering somewhere around 40% before the IPO. Just wanted to understand, will you still keep the factory that you had in Hosur, because that was, of course, on lease? So will that all the production eventually in the medium term move to the new factory that you're setting up?
We've already acquired roughly under 100 acres in Chhatrapati Sambhajinagar in Maharashtra, which is where installation of a new factory will commence very shortly with the IPO proceeds. Currently, we intend to continue our production out of the Hosur facility in Tamil Nadu and also the new facility in Aurangabad. Utilization of a current factory is rising up really fast. As you saw in last quarter's performance, sales grew almost 100% over previous quarter. And at that time, we were at about 30-35% utilization. So you can see the trajectory. In fact, my number one worry right now is that would we hit peak capacity even before Aurangabad goes live? So team is running full steam ahead to make sure Aurangabad, Chhatrapati Sambhajinagar comes live by next year, so that we manage the demand really well.
Right. Lastly, Tarun, I know that this situation is evolving and it would be difficult for you to comment, but on rare earth magnet, I believe that Ather has actually done a very good job, and you have looked at alternative supplies and alternative materials in fact also, and you're not expecting an impact of more than a 1 week production, right? So it's quite positive that has come actually, the statement, right?
I would read this as positive in the current climate. Our engineering and supply chain teams have spent an enormous amount of time over the last few months to find alternates. And I've been publicly saying in the recent comments that I do believe the near-term solution for our industry would be to move away from heavy rare earths into light rare earths, while continuing to look at magnet-free motors in the long term. So our teams are working furiously in that direction, and I remain optimistic that the impact of the crisis should be limited to this quarter.
Well, thank you, Tarun. Thank you for joining us and explaining everything very rightly about Ather Energy. With that, let's go across to our next guest for the show, Prashant Tapse, Senior Vice President, Research Analyst with Mehta Equities. Prashant, any views on Ather Energy? The quarter looked quite strong here.
Yes, when we compare two companies in the EV market, it is Ola and Ather. So Ather numbers were far better than what Ola has presented a few months back. So market is assuming to see which stock can do better. So in terms of managing their cost, managing their losses, I think Ather has done really well. And the new product of Rizta, I think that has really done very well in a lot of South Indian market, as well as entering into the middle market of India. So I think with respect to their margin management, with respect to their expansion and the product quality, so again, not giving any discount, these are the strategies why I think the numbers were really good, and I think the valuations are again going premium to what Ola is. So overall, very positive on this stock, with a target of at least 440 to 500 for next 12 months from the current levels.